Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Thank you both for being with us. We are in the thick of earnings season. We've got a slew of economic data. Look, we may snap the recent winning streak after hitting these record highs. This could be a down week, and sometimes on earnings, we're seeing stocks moving. Shake Shack this morning when I woke up was up about 45%. So there's definitely a lot of wild and fun and interesting things happening in the market. That being said, Alan Nuckman, how are you feeling about 2024? I know you do a lot of, you look at the data and technicals and such, but do you have a vibe?
Well, I'm feeling good. We're looking to get this tailwind soon, maybe not as soon as we want with rates, but it doesn't look like rates are going up. Our only concern is that the economy is too strong. That is our main concern. And guess what? When it came out strong, what happened? The market, you saw some profit taking. But guess what? 70 points in the S&P is only 1.5% at these high record levels. And we bounced right back and filled in that gap and look like we're ready to attack the highs once again.
Okay, so first up, let's talk about CSCO Systems. Had its earnings move, announced some layoffs. How are you feeling about this name?
Well, it's harder to trade now. I'm obviously looking for bullish opportunities, and there are multiples of opportunities. It's harder to trade stocks that haven't already had significant moves to the upside. So now Cisco is an example of a stock that's unchanged over last year, and over the last 2 years, it's down 10%. I love the bottoming formation. And to get into some of the fundamentals here, which I really don't pay attention to, but they can support my theory, the PE is 13. So this is a stock that's been between 30 and 60 for 5 years, so 45 is an important midpoint. 45 is also a double bottom that we've seen over the last year. So a breakout of our range targets 55 because we've been between 45 and 55 for 1 year. There's also a gap up above at 55. So a lot setting up some upside here. So I look to play with an in-the-money option. The 45 level, again, is an important point. That double bottom at 45 call stream for about 5. It's got 4 months of time. It's got a 75 delta. And so a lot setting up on Cisco when I've talked before about sometimes old becomes new again.
Yeah, understood. And when you talk about, where it was 2 years ago, I mean, disappointing for shareholders when you're seeing some of the other tech names taking off the way they have. It's sort of missed the boat in that sense. Ben, your thoughts on Cisco, which is around 49 and change today?
Yeah, Nicole, I bet it has been hard to trade, that's for sure. I mean, with some of the choppy price activity we've seen, there hasn't been a lot of really well-defined longer-term trend defined here, one way or the other, up or down. Alan mentioned also how we're unchanged on the year, which kind of speaks to, again, that lack of conviction one way or the other. Let's dive into a couple charts I've prepared for us here to kind of drive that point home. And first and foremost, the 30-minute candle chart, where you can actually see some conviction here. 52, 53, a couple weeks ago down to 47. But look at this, we're spiking off this level, inching our way back up here, and again, limited in terms of real follow-through. We're looking at a 30-minute candle chart here, and just want to show you what's going on here as we establish, again, a bit of a chop-type trade playing out here. There's really nothing easily identifiable in terms of trend. Now, last time we took a look at Cisco, we identified a similar pattern, right? A little bit of weakness coming into play. Here on this chart, I think you see a couple things. One is how last time, similar pattern in terms of earnings, right? High conviction sell-off, but limited follow-through. We kind of started to drift up off earnings. You're seeing that play out here again in a similar fashion. But let me also show you what's going on, because last time we looked at Cisco, we were establishing a bit of a balance that had formed around 49. Again, not much has changed. So let's just establish here that if you want to, and I think it's proper to, you can just extend this balance area out a bit here. Again, we are clearly hanging out around this 49 level and established value near it. So let's take another step back, because here's something where I noticed that if you remember, we had been trending higher, right? Stock topped out around 58. Alan mentioned 55, I think it was, as a significant level. I noticed that because once we got below that, we were no longer trending up, which doesn't necessarily constitute a sell, but it does kind of, for the buyer, let you know that that trend to the upside no longer is valid. So you're going to lose some of that conviction. And it ended up losing quite a bit of conviction to the upside. You can see how we bottomed out again, going right back down to those May levels from last year. But this is range bound. Look at this. It's not often, Nicole, that you don't hear from me a lean one way or the other. This one's kind of got me scratching my head.
Oh boy, scratching his head. SMH. Alan?
Right. So that's a good sign that it's sideways, and it tested and rejected the lows and failed. So Ben loves to see that. So we see a nice bottom base at 45. So from risk reward standpoint, I like that 45 call with some time for development, and it's trading about 5 or so. It's the expiration break even's $1 away with plenty of time for development. And if we hold at this 50 and pop above 50, then that should send us to the range top at 55. And if that happens, this option gains nearly 100%. So it's just about math and probability.
Okay. Next up, we have American Airlines. Your thoughts here?
Well, JETS, the ETF that tracks the airlines, has been looking very positive against, kind of backdrop of a lot of nonsense and noise that's been happening in the airline industry, obviously. So you have to focus on the price action, not what you think, but what you see. So we've been looking at this. This is a stock that's got a PE of 5. If you look in the bigger picture, we've been between 10 and 25 for the last 4 years. We're sitting about 15 right now. We've narrowed it down to this tight range between 12 and 16 for the last 6 months. A breakout of the range targets 20. So we're also 20% off the high from last July. I'm looking to buy the American Airlines $12 call. Again, that's a support base. Trading around 4, 6 months of time. Is $3 in the money. Look for this sector to take off and fly once again.
Yeah, all right. So he's getting in on the puns too, you see, Ben. Your thoughts?
Well, Nicole, as much as it pains me to get on board with Alan, this one I can subscribe to in terms of some of the bullishness here. Let's take a look. I'll show you why, because shares of AAL have been trending higher. I've got a 30-minute candle chart here, and we're looking at the stock when it was trading down around 13. Earnings sent it higher up to almost 16. We've been mostly sideways since, but you can see, again, a bit of a trend being established here on this 30-minute candle chart to the upside with 3 areas of value, very well defined, formed, and in a systematic type fashion. Oftentimes we see this, not every day, but every dollar we've established value. So as long as we hold above 1380, balancing around 1480, a very bullish stance. Look, we even tested that a couple times, held. So the bulls want to see us take out that $16 level and then form value at a higher level. But taking a step back, let's add a little time onto the chart. You're going to see a similar pattern playing out. Bottom left, top right. We're now looking at hourly candles going all the way back to end of October. We're talking beginning of November. Areas of value continue to form at higher and higher levels. You can see, again, the significance with the 1480, with the 1380. And you can see that pattern easily identifiable. So again, bullish position here, stance here. Looks like the longs are in control. Take another step back with me. You can see this is what I like about this. Looking at price activity through this lens, auction market theory concepts, the principles, the 2 phases of development, because not only do they help us see trend, right? We just identified a bullish trend off those October, November lows, but they help us see when trend is no longer present because it had been to the downside for quite a while. Look at this, a daily candle chart here we're looking at. A 4-hour candle chart, which goes all the way back to those June, July highs we saw up around 1920. Look at these areas of balance here. Just in a systematic fashion, stacking up, bottom out around 1086 when the bears wanted us to see a new area of value form at a lower level. Look what happens. We start inching our way higher. We take out 12. That trend lower gets invalidated when you're back above 12, and everything since has been bullish here. Nicole, I can subscribe to this one.
And it's interesting because when you take a look at American Airlines and that one's sort of trending higher, Jets is trending higher, to your point, and if you click on a few others, for example, we've had JetBlue, and you just have a little bit of a better vibe. You had Carl Icahn taking a stake in one of these names, so they seem to be slightly in favor, but they're definitely a trader's paradise. They're not the kind of thing that just shoots straight up. Alan, your thoughts?
Well, we've got a strong overall trend from that low. Again, the PE is 5, so it is a value stock in a weird way. But I was showing you this wedge that Ben pointed out in that chart. A breakout to the upside sends us up, and if we get to that 20 technical target, then this option doubles in value. That's what I look for.
All right. Next up, Antero Resources, Nat Gas, AR.
Yeah, I was looking at this yesterday and last week, and I wasn't expecting what we have like a 5 or 8% breakout today, but that's a very healthy sign. We're trading about 23 right now. It's been between 20 and 40 for 2 years. It's been between 20 and 30 for 1 year. So a push above the 25 level can give this a big pop. We've got a nice triple bottom. We've got bullish divergence back in December where it made new lows but not new highs, implied volatility. That's a sign of a sentiment shift. And it's still 50% off its 2022 high. So what I'm looking at here is a 20 call. Again, that support base, that triple bottom. A 20 call is trading for about 5. And I'm looking at an August option that has 6 months of time for development in this sector that has lagged behind so far.
Okay. Your thoughts on this one and looking at this chart, please, Ben.
Alan said the breakout was a healthy sign. I would argue, Nicole, that it's a healthy sign if you're looking for another sell opportunity in this longer-term trend to the downside. So I'm going to push back here a little bit. Let me show you why. First and foremost, here's the breakout behind me. You can see high conviction trade to the upside, 2 phases of development, easily identifiable, overlapping, random, horizontal, and then you get that high conviction, higher highs and higher lows, the initiative phase, and then we transition back into another area where, again, I'll give it to Alan, we are forming value at a higher level, but this is a 5-minute candle chart. I mean, how much credit do you want to give this, considering, again, it's the most granular approach towards trading that I think one should have. Let's step away from the 5-minute candle chart here, and now you can start to see that trend to the downside, which is easily identifiable. This stock sold off from 31 down to 20 into the end of last year, and you can see areas of consolidation along the way that formed. We're looking at a 60-minute candle chart here. So the reason I said that I feel like we're just kind of inching our way back up to a potential sell opportunity is because in a market that's trending lower, if you're looking to participate in the trend, you're looking for sell opportunities. That's going to come in the upper extreme of a range that you've been forming, which is kind of where we're testing right now, or a breakout below the range. And in this instance, again, we're looking, or the bears, I should say, are looking for another failed test of this, we'll call it $23, $24 level, back down below 22, open up a door for a retest at 20. Let me show you one more time, another step back, and why I'm thinking that the bears are still in charge here, why I'm subscribing to this kind of, or pushing back on this bullishness. Take a look here. You can see now we're going all the way back to May of 2022, and you can see again, even now we're just sort of inching our way back up to this balance area on this bigger picture here, those highs that we just mentioned in terms of testing upper extreme. We got a double top that formed. I mean, it's not necessarily stacking up in terms of a real bullish pattern here, I guess. I'd be more looking for something that kind of reverses this pattern, takes out some of the recent highs, gets above 37, for example, even. I mean, I know it's a ways off, but from what I'm seeing here, it does look like the shorts are still in charge.
All right. Yeah, are they? Alan Uckman, you get the final say.
I have to say, you were looking at a 5-minute chart. I'm looking at a 6-month option and being long from 20.
I'm going to leave it right there, gentlemen. It's always great to have you both on for the big three. Love when you're at the CBOE. We could see the action behind you there. And so that's always a lot of fun. Thank you both, Alan Uckman of bullseyeoption.com and our own Ben Lichtenstein there on the charts for the big three.